Welcome back. So today I want to talk about how I'm getting insurance for my 20 unit apartment complex. So every year you have to renew your insurance for your apartment complexes, for your properties. And what you want to make sure is because insurance is going up every year that I've owned my 20 unit apartment complex, my 26 unit apartment complex, my single family homes, the price of home insurance is going up. So you want to make sure that you're consistently shopping around your insurance to make sure you're not getting ripped off, to make sure you're getting a reasonable price, and just know that it's going to go up, right? So, um, for example, for my 26 unit, I bought it in May of 2022. So I had to renew it before May of 2023, and then once again May of 2024, which is coming up close. So what I do is I actually track the dates that my insurance is about to expire. So I know it expires May 1st. So I put a calendar reminder a month in advance for April 1st to start shopping around uh, insurance for my apartment complex, right? So I had a calendar for April 1st, and that's why I've been shopping around, and I want to talk about my experience doing it. So, first, what I do is I email my current insurance carrier. So, I use a broker. His name was Jake, and I just emailed Jake and said, hey, I'm due for renewal. Can I get a quote, a renewal quote, right? And at that point, I saw that the price went up from 13,000 up to 15,000, right? So out the gate, I was just like, okay, this is a $2,000 increase. Is it because, um, like I said, insurance goes up every year? So let me start shopping around, right? So I got my quote, and when you get your quote, there's a lot of things that you have to make sure you're looking at, right? So for part of the quote, something is you want to buy replacement cost insurance. So replacement cost insurance means that if your apartment complex burned down today, you could build it up to today's standard and have the money to do so. So this has nothing to do with how much you bought your apartment complex for. So let me give you an example. So my 20 unit, I bought it for $350,000. I put in $100,000 worth of renovations, and after the refinance, it appraised at around $600,000, which I think is very conservative because the cap rates are higher now. But in my mind, I think it's worth around 800. But in any case, the replacement cost value insurance. So if my 20 unit were to burn down and I were to build it from the ground up to 2024 standards, it's gonna cost me more than $450,000 that I put in, right? So um, for my replacement cost insurance, they usually do it on a price per square foot. So roughly my um, 20 unit is about 10,000 square foot, and the cost to rebuild is $120 per square foot. So if you kind of do the math, the replacement cost insurance is going to be about 1.2 million. So what the insurance is saying is that it's going to cost about 1.2 million to rebuild my 20 unit apartment complex to 2024 standards, right? So why I share replacement cost insurance, because this is how you protect yourself, right? In case it burns down. A lot of people get cheap insurance. It's so replacement cost insurance is codified as RCV, and then there's actual cost insurance, which is ACV, and ACV is a lot cheaper. It doesn't cover the full cost to rebuild the building, and so that's why I don't recommend anyone to get it. Like anyone that joins my mentorship, they get replacement cost insurance. It costs more, but that's why you need insurance, right? If one tenant leaves the stove on and burns down the whole apartment complex, you want to make sure you have good insurance, right? So, um, so for context, like a replacement cost value insurance policy is, let's just say it's 15,000. If I were to get a actual cost value, it might be cheaper, but the insurance is not as good, right? So now that you understand that, replacement cost insurance is what I shop. Okay, so I get my renewal, right? So in the renewal, make sure it's replacement cost. And every year they make you increase the replacement cost because labor gets more expensive, supplies get more expensive. So this year it was $120 per square foot. Next year it might be $125 per square foot, right? So that's one piece. So that's one piece. The next piece is your deductible. So for me, I keep it around 2,500 to about 5,000 for my deductible. So let me pull it up here. So just so I remember. Um, Yeah. So here I put in my deductible at around 2,500 to 5,000. So if you're doing 2,500 versus 5,000, if it's a $5,000 deductible, typically it's cheaper, but may not be by much. Might be like a couple $100. So at that point, it may not be worth it. And then what you want to do is you want to think about getting loss of rent coverage. So typically, loss of rent is if I'm collecting $10,000 a month in rent, and my apartment complex were to burn down to the ground, you can buy 6-month loss of rent or 12-month loss of rent. So let's just say I bought 12-month loss of rent. I'm making 10K a month. That's $120,000 a year. If my apartment complex were to burn down, I would still get $10,000 a month for the next 12 months as I'm rebuilding my apartment complex, right? So that's what's loss of rent. So for me, I try to get it, but if the cost is too much, then I may consider lowering it from 12-month to 6-month or 6-month to 0 month. But if I go to 0 month, you better have a reserve, right? Because you're not getting paid that rent. So what I do is I get a quote for all three, just so I can see the price difference, right? I want to see how much is it for 12 months of loss of rent versus 6 months versus 0 months. And if it's not much of a variance, then obviously you pick the one that's the best value. So typically, I try to get about 6 to 12 months, 6 or 12 months loss of rent, depending on the margin, right? So that's another portion. And another big thing that's in, like, if you're in Oklahoma, if you're in the Oklahoma area, Texas, there's a lot of hail. So they do require kind of hail insurance, and the deductible is 2% of the replacement cost value, right? So that's why. So so if my replacement cost value is 1.2 million and they want 2%, that's going to be $24,000. So I have major hail damage. Let's say it destroys my roof, destroys my windows, the walls. I have to pay $24,000, and then whatever's above that, the insurance will cover it, right? And for context, I replaced my whole roof for $25,000. So if let's just say the hail destroyed my roof and I need a replacement, at that point, I would do the math. Okay, 2% of 1.2 million, that's 24K. Do I want to make a claim on my insurance and risk my insurance rates going up in the future, or do I just pay 24,000 to fix the roof anyways, right? But so in that case, if only the roof was damaged, I'd rather just pay myself and not deal with the deductible and not deal with insurance. Or if there's more than $24,000 worth of damage, at that point, let's say I have $75,000 worth of damage. At that point, I would pay my $24,000 deductible and the rest covered by insurance, right? So you really have to do that risk analysis when dealing with your insurance. So these are kind of the three main things that I look at when getting my insurance quotes. So what I do is once I get my quote for renewal, I'll shop this quote around. So I'll send this to like 3 or 4 brokers that I work with. And also I'll shop for an online quote through NREIG. I think it's NREIG.com or .org. I forgot which one, but punch that in. It'll ask you for a bunch of information, and they usually send you a quote. So I'm shopping between 4 to 5 quotes to see what's the best quote, right? Sometimes your renewal is the best one, or sometimes a broker can give you a better quote. It's really weird. So, like, for example, my current insurance broker, it's through this company called like Third Casualty Insurance, and what's funny is like through the broker they quoted me 15,000, right? But I did submit a request through NREIG, and they also quoted me Third Casualty Insurance, and then for the same insurance it was like 20,000. Like, so how is it the same insurance policy? It's a $5,000 difference. And the only thing I can think of, and correct me if I'm wrong, is maybe the broker has connections or a bulk discount. So that's why it's still good to shop around through multiple brokers, because maybe this other broker might have connections with the same insurance company, and for some reason they get the same insurance policy for maybe less, right? So for me, I looked, I got quotes for 15,000, I got quotes for 20,000, I got quotes for 17,000. So I just go with the lowest one, right? So in this case, my renewal is gonna be the cheapest. But a lot of times when you email these brokers, they're gonna ask for information like when was the roof last replaced, one was plumbing replaced, one was HVAC replaced, electrical, how much rent do you get every year, any claims that you made, who's your property management, what's your occupancy, when was it built. It's just a lot of questions that they'll ask you, and then you try to answer them, and they'll give you quotes, right? So for me, I want to be proactive. I want to get my quotes up before it's due for renewal. And then once I decide to pick my quote, what I do is I typically will finance my insurance. So what I do is I'll ask them, hey, are there any financing options so I can pay on a monthly basis? And what's nice about this is when you break it up into a monthly payment, you can put it on your business credit card and get points, right? So if you're paying $15,000 a year, that adds up a lot of points, right? For just you know 15,000 for my 20 unit, 20,000 for my 26 unit. It just adds up, right, over time. So that's a great way, right? So kind of more of the story is get replacement cost insurance. You want to shop your insurance every year. Don't get comfortable, right? Shoot it to 4 brokers, one online, and I'm transparent. I'm like, hey, I'm trying to shop my rate around so you can give me the best rate, and just give them the information they need, and then you can make your decision. Once you choose, you bind the policy, and then you will make sure you finance it and pay it on a monthly basis, right? So hopefully this gives you some context as to how I deal with insurance for my apartment complex. Let me know if you have any questions down below. Happy to answer it. Please share this video with somebody who's thinking of like buying an apartment complex, because I offer mentorship, I offer coaching. I love to help people build their financial future as I have. And please remember to like, comment, subscribe. Hope to see you next one. Thank you so much.